Well, generally, these exponential age, these things with network effects where we don't value so much off cash flow, you kind of think of them as super long-term bonds. So therefore, super long-term bonds go up enormously as yields fall.
Right.
And that's how these things traded all the way through the COVID experience, because they're not cash flow constrained, because they just produce margin and cash flow. They're like machines, these things, extraordinary. So that makes them very attractive in times of economic slowdowns or economic uncertainty. So that doesn't mean you won't get volatility in them, but they tend to do extremely well indeed. So FANG stocks massively outperformed all other stocks last year. And I think that kind of environment plays out again. So I'm looking at that. Bitcoin, on the other hand, really is a play on central bank balance sheets and the adoption of the technology. So the adoption of technology goes relentlessly forwards. There's been less retail activity because of the sell-off and, some of the Chinese issues, and, the ESG narrative has slowed the buying down. So the market's been pretty heavy as Chinese miners have offloaded some of their inventory because some of them are closing up shop or having to move location. And that's weighed down. We see that Grayscale Trust hasn't been buying much Bitcoin recently. But over time, if I'm right and the narrative shifts towards, we need to print more money again, then Bitcoin's going exponential, because everybody understands that Bitcoin is the best asset in the world to own in a re-expansion of the balance sheet.
Yeah. By the way, Raoul, for people who are not familiar with the exponential age thesis, can you give us a thumbnail sketch?
The exponential age thesis is a new macro framework that says macro's normally about buying the puts, where you make the money when the economy turns down, like we've been talking about now. You go long the dollar, you buy bonds, and you buy puts on equities, and you make a fortune in short periods of time, and then you eke out returns over other periods of time by maybe owning emerging markets or other things. That's generally how macro's always worked. So it's very lumpy returns. But we're going to an age where what is the downside in equities? Because if equities fall, the central bank stimulates. If they stimulate, you lower the denominator and they get repriced higher again. And we saw that after the biggest recession in all recorded history. The equity market screamed higher, went down for a month, and that was it. Everyone's like, whoa. It's because they lowered the value of the denominator, fiat currency overall. So we know that basically in a situation where any growth is weaker, the central bank prints, and therefore equities go up. If equities fall, the central bank prints and equities go up. If inflation rises, the central bank caps yields and ends up buying all the bonds, which is the expansion of the balance sheet, equities go up.
Yeah.
So the only time they go down is VAR shocks. So that's a value at risk shock. That's when something else blows up like the dollar and equities panic. But again, the Fed's got your back. I know this sounds crazy. Everybody hates it. It is what it is. And I didn't want to believe this was true, but I now believe it to be true. And in that environment, you want to own the things that go up the most, and those are the businesses that have exponential charts because they're driven by network effects. So that's the network effect that we see in Bitcoin, that we've seen in all FANG stocks. Facebook is a classic network effect stock. So those things do really well in this kind of environment because they're groundbreaking technologies that are taking new adoption. Facebook, for example, is going to pivot towards VR plus crypto as it brings Facebook DM, and it's also buying up most of the VR world. So Facebook's going to play a big role in the future. Apple is doing the same with AR, and all this other stuff is going on. So these companies are repositioning for the next S-curve higher, the next exponential adoption of technologies. They're all coming, but that's also against a backdrop of the adoption of artificial intelligence, distributed computing, autonomous vehicles, electric voltaic vehicles, green energy, robotics, genetic sciences. All of these things are not now pie in the sky futurist stuff. They're things happening right now and are getting adoption in front of our eyes. If you want to see adoption, see Ethereum and what's going on there. That's mass adoption of technology. So these things are all happening at the same time. They give exponential upside rewards. So in this environment where the Fed's got your back on the downside and the upside's exponential, you want to be long the upside. and not looking to trade the cheeky downside, macro bet. This is the macro bet that we're transitioning into a different world. And a lot of people are very cynical of that because they don't know how to value these things. But once you understand, just use a logarithmic chart and look at the adoption of that network and the growth of the network and the number of connections that are being built in the network, then you understand everything and it all becomes clear.